£40,000. That was the figure that I stated I had lost 2 weeks ago. But I have had an update from BlockFi, and it's just made things worse. What's happening, folks? My name is Robbie, and I hate cryptocurrency. I've been investing in cryptocurrency since 2017. I've seen my fair share of ups and downs in the past few years, but this past year has taken the cake. If you're a subscriber to the channel, you probably would have seen my video 2 weeks ago titled, I just lost £40,000 in crypto. If you haven't seen that video, pause this one, go and watch it so you're up to speed with the current situation. A very quick recap is essentially I held cryptocurrency on a platform called BlockFi. This was an interest-bearing account and it was paying an interest of around 4 or 5% on your cryptocurrency. So I put all of mine in, about £40,000 at the time. The decent interest rate plus the opportunity for the value to go up seemed too good to be true, so I lumped everything in it. But after the whole FTX drama with the whole platform collapsing, it actually took a few other companies with it, including BlockFi. So up until a few weeks ago, as far as I was aware, that money was gone. But there is a new update, and I'm not 100% sure if it's a good update or a bad update, if I'm being honest. But before I go into the details of this update, I need one favour from you. I'm actually going to steal this idea from the My First Million podcast. They have what they call a gentleman's agreement, and that basically is that their content on YouTube and Spotify is not free. They actually take payment in the form of YouTube subscribers. So I'm taking the same stance. If you watch my videos and you're not subscribed, if you're watching this video and you're not subscribed, or you've watched previous ones and you haven't subscribed, in return you need to pay me by clicking the subscribe button. There's no way that I can check if you've done this, so this is the gentleman's agreement. The target is 4,000 subscribers this year, and I'm currently just short of 1,500, so I need quite a big push this year. So if you're watching this video, click subscribe, thank you. So here's how things are currently on my BlockFi app. I can see my balance sits at around $17,000, and this number comes from the amount of cryptocurrency I currently hold in BlockFi in connection with current market prices. But do you notice that little message at the top of that screenshot? Balances displayed on the user interface may not properly reflect underlying balances at the time of the platform pause. And this means that when BlockFi went into Chapter 11 bankruptcy, the legal firm navigating all of this locked in the prices on that date, the 10th of November, when the market was at its absolute lowest for 2 years. And since then, Bitcoin has gone up 41%. And for anyone who held cryptocurrency on BlockFi, that 41% wiped out, doesn't exist. We've missed that boat, which is quite inconvenient. So with all of this going on, the main way to find out any further information on BlockFi was to pretty much look it up on Reddit or Twitter, or maybe keep an eye on the news and search things like BlockFi and crypto and see what came up, until I received this email. Feel free to pause it if you're curious to read the whole thing. But it basically boils down to, this is what we valued your crypto on the date of 10th of November 2022. If you think that's incorrect, you need to fill out some forms full of legal jargon, American legal jargon, I might add, which is even more difficult to navigate, to claim the amount you believe you are owed. Now, my problem is this. The murmurs of BlockFi going bankrupt began in November. By the time I heard these rumours and talk on social media and transferred my funds out of my interest-bearing account and into a wallet account, this was November the 14th. BlockFi didn't announce Chapter 11 bankruptcy until the 28th of November, so I thought I was safe. I'd moved my funds from an interest-bearing account to a wallet account. As far as I was aware, I had done it in time, but they're taking the values from 2 weeks prior, before they even announced that they were going bankrupt. And now they're specifying that wallet account holders have a higher chance of receiving their funds back than interest account holders. But I transferred mine into a wallet account before they announced bankruptcy. I was ahead of the curve. So not only have they taken values from a date way before they announced bankruptcy, they also have my name down as an interest-bearing account holder as opposed to a wallet account holder, even though I made the transfer in time as far as I was aware. So now I have even less chance of getting any money back. So even though my account says $17,000 roughly, BlockFi's legal firm reckons that I have around $12,000. So I've missed out on that 41% gain since November, and there's also a small chance I get that $12,000 back. So where does that leave me? Who fucking knows? Does anyone know? Reddit doesn't know, Twitter doesn't know, Google doesn't know, I don't fucking know. The case is currently with the United States Bankruptcy Court, and the date of the bankruptcy hearing is set for the 13th of March. So I literally just need to sit on my hands and wait to find out what my fate is. But here's another little twist in the tale that I literally just found out this afternoon. The BlockFi executive team gave themselves pay rises after FTX collapsed. Now, I presume They knew their exposure to the FTX collapse, so why did they receive pay rises if they knew that people were going to be losing money? I wonder. Take a look at this table. The CEO, Zach Prince, his salary went from $250,000 to $400,000, a 60% increase. The COO, Flory Marquez, $225K to $500,000. That's 122% increase. All in all, the staff expenditure for the executive staff rose by 43.4% after FTX collapsed. Definitely beats inflation. While normal people who don't earn a $250,000 salary, like me, or most likely you watching, we've lost money on the platform. Absolutely insane. The Chief Risk Officer, risk, it's in the job title. He received an additional $110,000 in his salary. What risks did he mitigate? What risk did he stop? My investments are at risk, and he had one job, which was to mitigate risk. He didn't, and got a pay rise for it. But regardless of what you may think, this is not a pity party that I'm throwing for myself. I don't want you feeling sorry for me, but if you do happen to feel sorry for me, remember you can click subscribe. That would make me feel much better. But really, I made this channel for two reasons: to document my own journey in business, finance, investing, and to help other people learn about these things. And hopefully some people will avoid making the same mistakes that I've made, and will continue to make, most likely. So what sort of lessons can we take from this situation? If it sounds too good to be true, it probably is. The way that a platform can provide you with an interest rate on your money is by loaning your money out at a higher rate to other people. If they're paying you 5% interest and they're loaning your money out at 8% interest, they're making that 3% in between. That's their margin, that's where they're making the money. But if something goes wrong with that lending, they still need to pay you your interest. But what if everybody wants to recall their loans at once? That could send the company into a spiral, especially in a very volatile market like cryptocurrency, where something really bad can happen because it's not regulated enough, like FTX. So if it's too good to be true, it most likely is. And lesson number 2, diversify. Don't keep all your eggs in the same basket, because if you drop the basket, all your eggs break. Spread your risk. Invest your money in crypto, stocks, index funds, property, whiskey, wine, watches, whatever you like, but try to avoid having it all in one asset class, and definitely try to avoid having it all in one specific asset. This situation is less than ideal for me. Best case scenario, I get $12,000 for my $17,000 worth of crypto. That's the best case. Worst case scenario is I get zero. But imagine I had every penny that I own on that platform trying to make 5% a year. Imagine I didn't have property, stocks, cash in the bank, whatever. Imagine it was all in there. I'd be wiped out. BlockFi would not be the only ones declaring bankruptcy if that was the case. But I don't. I'm diversified through various asset classes. And then I'm also diversified through various assets within those various asset classes. For example, instead of investing all your money into one property, if you're able to, you could invest your money into 2 or 3 properties. But then you would also like to make sure you have money in stocks, for example, but not just one stock, a few different stocks. If you have the funds to do that. If you don't have the funds to do that, you've got to build the pot up, obviously. But if you spread your risk, it makes the downturns way more manageable, and it makes the bad days significantly easier to handle. Thankfully, this whole BlockFi situation, I haven't really lost any sleep over it. Would I like the $12,000, or more importantly the $17,000? Absolutely. Is it keeping me up at night? No. And that's because I'm diversified to a certain extent. I'd like to be more diversified if I'm honest, but I am diversified. So that is the up-to-date situation with BlockFi. The last BlockFi video I did 2 weeks ago was my best performing video in like a year and a half. So I figured once I received an update from BlockFi, it was probably necessary to make a video in case anyone was following along or is affected by this as well. Next week's video will be considerably less doom and gloom, I promise. So make sure to subscribe so you don't miss that. Thank you as always for watching, and I will see you next week. Take it easy.